Okay, so good evening, everyone. We are today on a Saturday. This is our weekend session, the Saturday session, 24th of June. It's almost 5:01 p.m. First, we'll take a look at the Nifty, Bank Nifty, and the various sectors, and then I'll take a look at your questions, doubts, and if you what are the trading opportunities for next week. With that, let's come to sectoral indices. Let's first quickly take a look at what's happening with Nifty. If you remember, Friday, Thursday, Wednesday, Tuesday, last Tuesday, on this day, we had a morning session. I was traveling on Wednesday, so we took the session on Tuesday, right? So I'm talking about this particular green candle. This particular day, the market had opened weak and it was down in the morning, and we were marking these in the past opportunities, windows of opportunities wherein the prices slipped, and we discussed that a counter move can be an opportunity to go short, but that didn't happen. Bounced back really sharp, created another positive day, which landed up creating further M1 and RSI divergences. You can see how the entire divergence over here is slowing down. These are slowing down, which means that every time the market is trying to take out its previous fractal high, every time it's trying, it is not getting the follow through move, not getting. This is what it is reflecting here, which means longs or the underlying strength of the market does not have the kind of strength which was earlier there. This is what it means. That can lead to a reversal. This reversal can be a possibility. Okay, so that's the meaning of divergences. Let's come to what happened on Friday and Thursday. So this was yet another move, just like this, which has led to a swift, quick turnaround. We were using the term breakout failure this day morning. And as we look at this right now, on a closed basis, this also seems like a breakout failure. We can consider this as the breakout, or this as the breakout, or this as the breakout, because every time it had broken out, it could not sustain. So do we have a breakout failure in our hands on the daily time frame? The answer is yes. We know our short-term trend indicators. We know our short-term and medium-term momentum indicators. We can clearly see the behavior of Heiken Ashi. So the view gets created. I hope there's no doubt in terms of what should be your short-term view on the Nifty from the daily time frame. It's bearish. Do we have a trigger? We have a breakout trigger. We have a Heiken Ashi which is red hot. We like to call it red hot, which means below Friday's low. It's a shorting opportunity. The problem with this kind of a breakout short is, where do we put the stop loss? On a very strict basis, the best you can do is use KC high somewhere here. But if you go by the logic of Heiken Ashi and the way we look at it, at least the previous higher shadow, which will take you up here, which means the stop loss becomes fairly wide. Okay. So we will not go with this breakout. We would rather like to trade the counter move. We're more comfortable trading the counter move than the breakout, right? So back to the 75-minute time frame. So I look at this 75-minute time frame, and we can clearly see that it's shifted into a downtrend with the momentum in the support. So that there's nothing contradicting over there. There can be a mild 2-bar RSI divergence kicking in, but it's in the 75-minute time frame. Weekly, momentum indicators still seems to be fine. We are not worried about this. Trend also fine. It might have hit an all-time high, or just 18,887, 888, 886. So let's consider. Let's give the credit to the Nifty, spot Nifty, that it did manage to go to its past all-time high. So not bad. Which means the trend is still there. It's strong. We do not doubt it. We have a dark cloud cover. We have no as such bearish sign from the Heiken. The bodies are shrinking a bit. That's all right. That's a dark cloud cover. Whether this dark cloud cover will lead to further movement on the downside or not, that needs to be seen next week. But we have our view, and we know we are not going to chase the breakout. We'll look for the pullback, the counter bar. Nifty vis-a-vis the dollar index, this is the ratio chart. You can see how the divergence had started to play out. And this is what it means that sell Nifty and buy dollar from a daily point of view. It's a ratio. The weekly charts had given us a structural big breakout. This is good chart. This is a good news for the Nifty, long-term Nifty chart coming from the weekly time frame. So the bearishness, the view that we created, or the view that we created, which is bearish, we'll say short-term cautiously bearish. I think that's the right approach. But we're getting the similar kind of a view from the ratio of the Nifty and the dollar index. This is Nifty calculated and understood with gold as its base. So the ratio is back to its levels, which was there in around, when was this? Feb 2023. So back to those highs. By the daily time frame, you had this breakout and it had moved pretty well. Now it's slipping a little bit. It's not bearish. It's not like sell Nifty and buy gold. This chart and this chart, the combination is not giving us any such sign. Maybe from a short-term point of view. So we took a look at Nifty, the Nifty dollar index and the Nifty gold, and the view that we have created is short-term bearish, but not selling below Friday's low, waiting for a counter move. Mid and small caps were exceptional, and they are still. The kind of movement that CNX mid cap has recently given us is phenomenal. I would recall again the fact that I said that when we see such breakouts, especially 1, 2, 3, 4, 5, 6, 7, 8 week breakout, after it breaks out in 8 weeks, they generally throw back. They're tired. Doesn't seem to be the case. So exceptional breakout. Readings on the oscillators are really stretched, which is a very obvious thing. And they did participate well in the market. I don't exactly remember when I was discussing this, but there was some online interaction was happening where I was saying that a classic strategy that generally the market tries to do is slowly slide down the heavyweights like the Reliance and HDFCs and Tatas, SBIs, but keeping the mid and small cap and keeping the momentum in the small and mid cap space intact, where the party continues, but slowly a lot of large caps starts to shift down. And that's exactly what has been happening over the last few weeks here. This is the mid cap with the 500. There's nothing much. The ratio is not bearish yet. And this is the CNX small cap, which is also exceptionally. Apart from the fact that it is stretched, apart from the fact that the last leg up here had some slant with M1, which had created some divergence, apart from these two, there are no other evidences which can tell us, okay, we are going to go short. So we just have to wait for further deterioration of the momentum and then the trend. Bank Nifty, this is an important one. And all these areas, our expectation of a slip from the Bank Nifty, more or less we have played it. We made some decent trades, so that's behind us. Now what? Now if you notice, especially Bank Nifty on the daily time frame, here we are, the M1 essentially started to generally drift with slight movements on the upside all this while. Okay, let's go of M1. If you see M2, this is the behavior of M2. And this has been happening for quite some time. I'm talking about 5th of May. So entire May and entire June, almost 2 months, the Bank Nifty's momentum has been on the downside. But if you take a look at the price behavior, this was a slant, and this is the corrective. It's not a smooth move. It's not like it went up and it came down. It's not like that. It's more of a range-bound slowdown and range-bound correction. It didn't actually crack like this. It did not give us 3 or 5 candles one after the other, lower high, lower low. Breaks, bounces back sharp, breaks, bounces back, starts to break. So it's choppy, but bearish. Element-wise, again slips into a short-term downtrend. Momentum anyways is slightly weak. A rounding topish kind of a behavior is what it is going through. Weekly charts have started to slip. Weekly momentum has started to slip. So I think if any kind of a signal trigger, if we get, I think it will come primarily from the weekly time frame. What about the daily? This is giving us a breakout opportunity. Not exactly a breakout because the Heiken has a little upper shadow on Friday. So view is bearish, but I think this is what I feel, is that the first leg of weakness came from Bank Nifty, wherein your IT, metals, and other stocks were holding the index well, like Larsen and all that. Now I think the Bank Nifty is probably not going to crack, and if the Nifty comes down, it will primarily come from non-banking stocks. Maybe once we take a look at the sectors and the stocks, we might get some clarity. What I'm trying to say over here is our bearish view in Bank Nifty at this juncture is not very clear, is not a high confident one like we have it on Nifty, because it's choppy, because it's volatile. That's the main reason. So we'll act sensibly, cautiously, if we find any bank shorting opportunity. Bank Nifty versus CNX 500, we have discussed this. See the kind of underperformance that this ratio has given us, right? Now the ratio has created some divergence, and now the ratio is improving, which is telling me buy Bank Nifty, sell CNX 500. That's exactly what I was saying some time back, that if the weakness in Nifty plays out, then probably the banks will not participate in that weakness as much as it did over the last 2 weeks. Maybe. That's what I'm making sense of these charts right now. CNX, now the finance or the financials actually, non-banking financials actually played out a better role, because this is a good chart. This is not a very weak chart, though the momentum had completely stayed down. What it did also, it created a breakout. And I think over here, I'll use trend lines to just mark them like this. Okay, let me use red for, let me use red for resistance. This is better. So what I was saying is, as the momentum stayed down for CNX Finance, it did create resistances. It did manage to give some short-term breakouts, and it didn't actually come off like Bank Nifty has, and that is primarily because of Bajaj Finance, Finserv, whereas on the other hand, you had ICICI Bank and the other banking stocks, Kotak, which is relatively much more weaker. So finance is still holding fine. It's okay. Trend-wise, if you see, there's a lot of dojis happening on the candles and Heikens. M1 has started to drop, M2 yet. इसका मतलब ये हो सकता है that if this turns out to be a failure, let's now closely take a look at the daily time frame and read the elements. Trend has just slipped. Momentum has just again started to angle down. Not enough evidence. Is this going to be a breakout failure? What do you need for that? We need a decent sized candle on the downside, which will confirm the breakout failure, which will add more momentum on the weakness to the underlying reading of the momentum. Maybe a slip below this weekly low. So we should give it a little bit of more time. What if it shows some strength and breaks out like this? Who knows? If that happens, then we might get some long opportunity. And in that case, I think HDFC will be the key player. Right? So finance, I think we wait and watch. View, element-wise, reading of the element-wise, of course, bearish. But who knows? Who knows? Maybe the M2 is this strong, it can pick up. So we are not keeping any bias on the finance. Let's now come to the individual sectors like auto and the rest. Auto. Momentum clear on the downside. No doubt. Trend, as the momentum started to slip, this leg was more of a slant. This leg is more of a directional. These 3-day move. So we have a view in our hands. Negative. We have a breakout bar on the Heiken. Are we going to go below the low? My answer is no. We'll use as a counter. So later when we go to the auto pack, the auto stocks, we will be essentially looking for shorting opportunities. Okay. This has a tinge of contrarian behavior in it, because when we take a look at the weekly charts, exceptional movement, stretched M1, M2 readings and RSI readings, no significant signs of weakness except the fact that this is a clean, good-looking bearish engulfing from the candles. So we will be looking to go short on with CNX Auto or some auto names, and they will be primarily contra in nature, keeping in mind the weekly charts. Has it started to weaken if we take a look at the ratio charts? Yes. If you see the ratio of CNX Auto versus CNX 500, the weakness of the trend and the momentum is well established. Two negative candles on the weekly time frame of the ratio. So relative terms, it is weakening. So auto can be a good spot space to look for shorting opportunities. It's got some room on the downside. So reversion to mean room. This is tricky. This has been tricky. Now, the tricky because movement on the upside is not sustained. Movement on the downside did not extend down, bounce back, now slipping again. So in this particular area, this one, where it's angling up like a channel or a rising wedge, whatever it is, it's been choppy. So we read the elements. Short-term trend has slipped. Momentum again has slipped on the downside. Weekly, what do we have? At the 5-period EMAs, M1 is slipping. So when you add these evidences, the view is bearish. Not a very, very strong bearish because you have the M2 improving on the weekly. You have this bounce back and you're looking at this as a retracement for further upsides. That's what the reading is coming from the weekly, but the daily is not supporting it. So essentially, if you see these fractal lows and fractal highs, if you drop some kind of a trend line, essentially this is what you're getting. A downward flag or some kind of a pattern, which means breakdown or breakout. The trend previous was down, so the possibility of breakdown is more. So IT is in a spot where it can give us some shorting opportunities again. How strong is it? Can we go below the low as a breakdown? We can, but again, the same logic will come. We'll land up having a very wide stop loss, so we'll wait for a counter. So IT is in our list for a shorting opportunity. Auto definitely. Bank Nifty will keep it blue. We are mildly bearish. Do we have pink or something? I don't think so. Yeah, we have pink. Okay, Nifty red. These are views coming in clearly from a short-term trading point of view. FMCG. Interesting because breakout, failure, momentum shift, trend shift. So I don't have to talk about much about this. We have the view established on the downside. It's been coming off for 1, 2, 3, 4 days now. So we'll have a counter move to go short on that. Weekly charts have a quick 2 bar reading of RSI divergence. So that might help us. It was stretched. It is stretched in M2 readings. So reversion to mean kind of a move we can get, but not the breakdown. Will act as a pullback trade. So FMCG. We need to be a little careful when we try to sell FMCG, consumer durables and all that, healthcare also, because they might act as pockets of defensive in a weak market. There you go. Metals. Momentum, trend, but range expansion. The move, Friday's move was pretty long and it has taken outside the 2 standard deviation. So view bearish, action, we wait for the range to contract. What about weekly charts? What I see in the weekly charts is established trend and momentum, and it's a counter move which has taken the shape of a bearish engulfing. So this is more of a retracement of this uptrend. So this fall, we should not extend, it will come down all the way down. We should not, it can. But this can act as a retracement, this can act as a consolidation. So metals, not that bearish. We will rather look for auto and IT than metals. So I'll keep it that we'll use this pink color. Media, we are not much into trading this. Z actually cracked. So what we are looking at here in media weekly charts is a throwback. This is a throwback after the breakout, right? Then we have pharma. This is the ratio, I'm sorry. This is pharma. Now M1 divergence, now slowing down in M1 and M2. Price has just slipped below the 5 AM and given you a counter. Good looking weekly charts. Not much of a problem in the weekly charts. If we see a breakdown below Friday's low on CNX Pharma, we can see a little bit of further weakness. So we'll mark it blue rather than red or pink or anything. Weekly charts are strong. Daily charts are just weakening, not as weak as auto. So we'll mark it blue. We'll look for opportunities if we get any strong ones. Energy. Breakdown failure. This is a 1, 2, 2, 3, 1, 2. 2 count RSI divergence. Trend momentum shifts on the downside. Hike and supportive red hot candle. Weekly charts, again, not that bad. In fact, they're pretty good. It's just a question of this consolidation. this breakout is now throwing back. What it has to do is it has to go beyond this Friday's high for the trend to sustain, or else it will start to weaken. This was the breakout point. Resistance, resistance, resistance. Will it act as supports? This we will get some clarity next week. If it doesn't, if it gives a counter, we have shorting opportunity. So I'll mark it red or mark it pink because the weekly charts are strong. So, and finally, real estate. Now, this was the final breakout, and this was a dragged move on the downside. This is not a breakout failure. See, in terms of breakout failures, once it breaks out, the counter move happens within the next 2 days. Those are the best of breakout failures to trade in the opposite direction. This is not that case. Weekly charts, exceptional. Dark cloud cover over here. M1 has just started to loosen. Exceptional move. We did get some opportunities here. And M1, M2 definitely is on the downside. So any kind of a counter move is a shorting opportunity. So we'll mark this red. So before we go to the individual sectors, the stocks which constitutes these sectors, we'll quickly wrap up our views on the markets and the sectors. Nifty is moved into a short-term downtrend. We are not chasing below Friday's low. Any kind of a counter move, if it's shallow, a small little counter move early next week will be a shorting opportunity. On the weekly charts, it's essentially reverting back to its averages. So this shorting opportunity, we are not looking at a very, I would say, large downside point of view. We don't see that clarity. We don't have that clarity right now. What I can do is I can quickly open the Nifty futures chart, and I can work with some anchored VWAP and just keep it at the fractal lows. There you go. So 18,440, 18,500, 17,860 kind of readings from the weekly time frame anchored VWAP using the lows is few levels we'll keep in mind. Okay. Bank Nifty has weakened, but not too sure because of the choppiness it delivered recently. Mildly bearish view, we need to be careful. Auto, we are bearish, looking for a bounce back. IT, we are bearish. Not as much as auto, but IT, if we get opportunities, why not? FMCG, same story. We'll be a little careful with FMCG because they play as defensives also. Metals has given a huge move on the downside, which led to a range expansion. So we'll wait for the movement to slow down. Pharma, unbiased, but mildly on the positive side from the weekly. If Friday's low breaks on Monday or Tuesday, then we have some shorting opportunities. Energy, yes, again, shorting opportunities, and real estate as well. So the look at the sectoral behaviors essentially goes on with the reading of Nifty that we might get follow through weaknesses from non-banking stocks, maybe. Tricky one for me would be finance. And if you ask me amongst the top 20, 22 names that we track, it's the HDFC twins that's essentially fooling around. So let's go ahead and take a look at the stocks. Let's scan and find some opportunities for next week.